Welcome to the weekly rate update. I'm your host, Craig Fuller, here with John Paul Hamstead. We're talking about the market, where we've been and where we're headed. JP, it has been I think a really good week for the most part. What are you hearing in the market? What are you seeing?
Yeah, I mean, we're seeing a combination. I mean, it's weird because I cover brokerages, right? So bullish sentiment in the market, especially towards spot rates, especially when shippers don't necessarily know what's happening yet, kind of squeezes brokers.
So from what you're saying is asset-based carriers are seeing the benefit of volume.
That's right.
And rate.
That's right.
Opportunity.
Right.
Are we seeing contract rates go up or just spot rates go up?
Just spot. Contract is still under pressure. People are still either not getting the volumes that they want or they're not getting the rates that they want.
So for if you're a freight broker and you have exposure on really the buy side right now, where you pre-sold rates at a fixed rate under contracts, and now you're having to buy increasing spot rates, that obviously compresses your margins.
It does. I've talked to two brokers specifically who said that it's taking them longer to find capacity out of the West Coast. It's costing more than they wanted to pay. We saw that was a Chicago-based broker. Another Chicago-based broker showed me his actual gross margins and what he was getting paid versus what he was paying out earlier this week, and he was negative on the day.
And this is out of from West Coast origin freight or overall?
This was overall for the day. He was heavily exposed to reefer. I mean, especially a lot of the smaller, aggressive brokerages who are trying to grow all of their accounts and have zero customer churn, they're taking losses sending trucks into Vermont, into Florida. Even I saw somebody lose $2,000 on a load going from Minnesota to Phoenix. So
are these? Would you describe these as big enterprise-based brokerages, freight brokerages, or
$100 million plus yearly?
So I mean, pretty decent size, mid-size. Or,
yeah.
I guess it's interesting because I was talking to somebody about enterprise, and I said a mid-size trucking company like Covenant and U.S. Express, and they're like, those are big, and I'm like, well, I think when you're comparing against Schneider and Hunt and UPS and FedEx, and XPO, those are really big, and then you have, so it's all perspective. But you're really talking about 100 million plus brokerages.
Yeah,
is where you're seeing it.
Yeah. So large brokerages, but not your publicly traded ones.
Got it. So we're seeing margin compression because spot rates are increasing, right?
They're either steady or increasing in all the major lanes.
Got it. So earlier this week, JP, another publication wrote that container volumes were actually down and were decelerating into the West Coast. It was interesting because I saw this and immediately thought that's counter to our data. And then we spent the morning sort of looking to see if there was something, because I wasn't sure why they would be reporting a slowdown in container volumes, and we didn't see that data.
Right.
What happened is they then retracted it. But what was interesting is through that exercise, we found out that container volumes have been steadily increasing through this cycle. But that's also, I think you did channel checks and actually found that there had been firming in the trucking market off the West Coast.
Definitely. Yeah, people said, again, that it's taking them longer to find trucks. It's costing more. This is both at private sort of middle market brokerages, but also sources at publicly traded carriers.
Large truckload carriers.
Yeah, that have logistics operations.
Got it. And they said that West Coast volumes are firming off the West Coast, correct?
Right. And I think it's also bullish because intermodal rates were actually much higher than trucking rates out of the West Coast. So I looked at the lane from Los Angeles to Dallas. Mm-hmm. Intermodal was a good 20 cents a mile higher than trucking. So that's going to pull volumes into the truck market. Now,
but it also gives the trucking market a little bit room to come up in price. Yeah. Because ultimately there's been this. Over the last really decade, there's been this push-pull between the rail intermodal market sort of set the lower part of the market until you're in a correction like we are in truck. where then trucking rates are cheaper. But historically, the rail market has been sort of the base rate, and where you see this inflection point of spot rates lower than intermodal, it suggests that one of those have to correct. Naturally, intermodal should come down towards the trucking rate, and perhaps trucking should go up. I mean, do you think that's happening?
The railroads did cut intermodal rates on average across the country, almost every market.
When did this happen?
Like Tuesday night.
Okay. They announced it, all the railroads, or just one of the railroads, or a few of the railroads?
Pretty much all of them.
Okay.
Part of it has to do, it was interesting. I mean, part of it, Union Pacific is going through their PSR thing. It's called the Unified Plan 2020. Part of that is they're basically any of the lanes where they can't double stack intermodal, they're getting rid of those and not offering those services. So their intermodal volumes are actually down like 9% compared to where they were last year, but they're trying to firm up prices and make more money doing intermodal. Mm-hmm. So I think that also will push volumes into trucking and kind of support that going into the peak season.
Now, one of the things that has happened in the last week as well, there's really been two major economic stories. If you sort of take the you take the market and you look at it from, we had tariffs announced on Chinese goods and then retracted.
Partially.
And so that is certainly news.
Right.
And it sent the financial markets into a tailspin. And we've now seen the yield curve actually invert.
Yeah, 2s and 10s, not just 6 month and 10-year, but 2s and 10s as well.
So the signs of recession potentially, or?
It's not good. I mean, people look at the yield curve in two different ways. One of them is it's what bond markets think about future growth, but it also impacts behavior. So just real quick, if you're a bank, you're borrowing money at the short end of the curve and you're lending it at the long end of the curve and you make money on that spread. Well, when it's inverted, you have less of an incentive to lend money. Mm-hmm. And so the resulting credit crunch, since the economy, it hurts the economy. It hurts economic growth.
Yeah, for sure.
So that's one reason why it's not just an indicator. It's not just a signal of sentiment, but it actually, if it persists more than a couple quarters, it really changes the behavior of financial institutions.
Yeah, and QE in Europe and quantitative easing and now negative rates has certainly distressed the German financial markets.
And really bad industrial numbers and export numbers coming out of Germany. Really bad numbers as well coming out of China. It's our industrial numbers and manufacturing don't look great. We still have a lot of retail strength. We reported this morning on the new retail numbers that were coming out. It seems like retail spending is still growing above 4% year over year, which is very solid.
Yeah, it's robust.
And it's correlated with still low unemployment and still pretty solid wage growth, especially sort of in the bottom half of households.
The housing market is not good, and that came out. The New York Fed talked this week about the housing market. I think the term they used was anemic in terms of activity. And of course, in trucking and in freight, we care about the housing market. The housing market has construction broadly is a big user of trucking services.
Right.
And so if there is an anemic housing market, that's certainly going to impact freight demand.
That's true. I think we're past this. With housing, you've really got two big selling seasons in the spring and then back to school. People trying to move.
It's the summer. You put your house. You put your house in the spring.
So
and you sell,
that's housing market activity is not going to be as important as GDP going into the third and fourth quarters. What we're really worried about and looking at is retail. That's what's going to matter. That's what's going to matter for container volumes, trucking.
And Walmart blew out their earnings. I don't know if you saw this morning.
I did.
Walmart had an exceptional quarter, which I think suggests two things. One is, the consumer is still robust. The second is that the Amazon Walmart story is Walmart is gaining ground on the competitive issues. And I don't know necessarily that they're taking share from Amazon, but they're certainly not losing share like perhaps people had feared that they were.
And Walmart is, I need to dig into that transcript and look and see if they talk about any of their supply chain strategy around the tariffs, because people expected, people, especially like dollar stores, any kind of discount retail, anything heavily exposed to, low margin Chinese imports, like you would think they would be really
But
affected.
they've talked about, and I haven't read it as deeply as perhaps I should. It's breaking news, but they did talk about the fact that tariffs have not yet hurt the consumer and haven't hurt consumer spending.
True.
And I think we're talking about goods that certainly are sensitive to price pressures, but most of the retail goods were left off the original tariff.
That's right.
Hit. So I don't know how much of that's an impact, but certainly consumer confidence has not been impacted yet by the tariffs. It seems to be more of a business-to-business story, and particularly in certain sectors like auto, but that may be more secular. We just may have seen peak auto. Housing is certainly probably a function of the tax reformation in parts of the country, and just a lack of land and the cost. So I think there's some issues that are specific to these subsectors, and then manufacturing is probably the one that really has been most impacted by tariffs, because manufacturing is far more exposed to trade than really any of the other sectors of the economy.
And it's also, business investment decisions, are really hurt when there's uncertainty around policy.
For sure.
And there's a lot of uncertainty around trade policy, right? It's
without
quite
doubt.
unpredictable. So
and the question is, interesting news overnight is the Chinese. So Donald Trump has sort of backed off his hoping to negotiate, and it looks like the Chinese are sort of digging in with threats of using monetary policy and other sort of weapons of economic destruction at their disposal to really put pressure on the U.S. markets.
yeah, I'm not trying to look at my 401k this week, but I will say
I don't want to look at my stocks.
if you look at the trucking forward curve, though, I think sentiment is
You're talking
still
about rates forward curve.
Yeah, trucking spot rates, forward curves, and the trucking freight futures market on the nodal exchange. Anyone in Sonar can pull it up and see essentially sentiment going into not only the end of this year, but through all of 2020.
And what is it saying?
People expect a healthy peak.
Yeah, so I think we should probably wrap it up, but I think we're going to see a great peak. I think it's really going to surprise. And frankly, it's interesting because there was sort of all this negative news that showed up on Twitter from various media outlets about the freight market, and I went and looked at our data, the OTVI index, and it actually showed that August was better this year than it was last year, and actually showed signs of strength. I would say encouraging signs this August, where I think there's been some growth, and I think it's unexpected, particularly the West Coast. I think a lot of people expected tariffs to really bring down the market. We're not seeing that.
No, and in fact, the Port of Los Angeles had its best July ever, 900,000 TEUs coming in.
And the East Coast ports blew it out as well.
Yeah, Savannah did very well. New York, New Jersey did very well.
So some of that news that's coming out perhaps is just data that's lagged. The stuff that we saw back in May,
it's on a lag.
We saw in May is really more of a reflection of a lag in the market, perhaps.
It's on a lag.
Misinterpretation of data.
Yeah, so I think eventually spot rates will catch up to the volume data. Mm-hmm. That's going to happen at some point.
Yeah, so we called when you look at the numbers from our outbound tender volume, May was really soft, and we came out in mid-May and talked about softness. June looked like there was a little bit of still softness in the market, sluggish, and then we saw that in the second quarter reports. Most of the public carriers came out, and not every one of them. Some of them had decent quarters, and some of them actually had exceptional quarters. PAM had an exceptional quarter.
Yeah.
Old Dominion had an exceptional quarter. Always. They're the honey badger of freight. Old Dominion, they don't care. Honey badger don't care. Old Dominion don't care. But PAM did exceptionally well this past quarter. But most of the other public guys really struggled. It's interesting looking at it. You had just said it, that was it July 31st that we said the market was recovering?
Yeah, so we call a potential recovery out of the freight recession on July 31st. It was the first day, basically 10 months in, when I think year-over-year comps started going negative in October 2018. Mm-hmm. We talked about the faucet of freight being turned off in the first week of October 2018.
It was so weird. I remember on August 1st, looking at that first week of August and seeing how the chart had dropped off significantly on August 1st. In fact, it was like, what's going on? Is there something wrong? Is there some flaw in the information? But it turned out to be correct, and it turned out to be validated by the other data points. And so we saw it drop off in early October of last year. We saw it again drop in May. But to your point, we saw it increase in July. The end of July was actually a really bang up end.
What's going to be interesting is how the different players, how this information flows through the markets and how the different players react. I think that brokers are going to be in for more pain unless they can really,
it's all margin compression,
unless they can talk to their customers and get them on board. With a real sort of descriptive and compelling account of how this market is starting to flip.
Yeah, you had a great quote. I think I should probably close it out, but you had a great quote this week that you sent to me, and I'd love to hear you say that.
It was kind of one reason why we think spot rates are bottoming or are flat now, and it was from a brokerage executive who got a message from a very large shipper. And that shipper said, hey, we're updating you on your position in the routing guide. The primary carrier on these lanes just went out of business, so you're up.
So they're number two, now they're number one.
Yeah.
That's great. Hey, that's the thing is, and when I used to do a lot of freight.
And clearly they have a higher rate, right? That's why they were secondary.
Well, that's what I'm saying. When I was in the rate, when I used to do RFPs, you never wanted to be the first carrier. Like you always being the first carrier meant you were the cheapest.
Yeah.
And so you wanted to be number two or number three because that meant that you were sort of down the waterfall and your rates were a little higher.
And this is just an anecdote, but it's really the first concrete example I've heard. Besides, it's taking longer to cover a load, or things are getting kind of tight over here. It's the first concrete example we've had where the capacity bleed off is now supportive of rates.
Yeah, I think this is going to be interesting to watch, certainly for the rest of the year. We're going to be back next week here on the weekly rate update to talk about the freight markets. You can tune in every single Friday as JP and I decipher what we're hearing in the market using information and data assembled by Sonar and the Sonar team, as well as sentiment and confirmation from folks that actually are in the market. I'm Craig Fuller with JP. We'll see you next week.